Hi there, Serial Trader here. Let's do an update on Apple. So since the last video, we had our ABC down. I was pointing out a good entry here for what would likely be a resumption of the uptrend in a new impulse wave. So certainly working quite well so far. We got a 1 up, 2 down, and then we have a 1, 2, 3, 4, 5 of 3. Now it looks like we're coming back into fourth wave. And then after that, expecting a resumption up in this fifth wave to complete the sequence. So still some more upside, although I would say once we do have a fifth wave up to new highs, that could be it. That could be the extent of the move. So depends how far we go. 235, I still like that target. We got pretty close in our wave 3. We got to 233.45, and then above that we have our 244 target. Might be a little exuberant, although it certainly wouldn't surprise me to see us get there if we have a nice strong fifth wave. But it's just going to depend how strong that fifth wave is. So at this point, I've drawn a base channel from 1 and 2. We broke out that clearly, so visually confirming that third wave. Now we've come down, and so far just finding some support on the top of that base channel, which is very nice if we can hold that. And also I did a fib pull from the bottom of wave 2 to the top of wave 3. And the 382 retracement, which is the most common wave 4 retracement, we seem to be bouncing off of that quite nicely along with the top of this channel, so that's nice. The next most common wave 4 retracement will be the 50%, which will bring us down to 225. And obviously for this to be a fourth wave pullback and a continuation in the sequence, we can't have overlap. So we absolutely cannot go and touch that 222.28 high of wave 1. That would void this current wave count. So bottom line, still liking further upside in Apple as long as we can reverse here right away, which it looks like we can. And okay, let's go the candlestick chart on Thinkorswim. And I'll address Denzel's question on rolling just in a moment here. So on the candlestick chart, all right, we got nicely above the T line, the 3T line, crossed above the T line, and we had a nice flowing move up. Made a short-term peak here. Came down today, but as you can see, we're finding some support just bouncing off that daily T line. So certainly nothing threatening about that. Certainly no actual candlestick reversal signals or sell signals. So everything still looks poised for more upside here, at least short term. Our oscillator did get overbought, which that was a good warning sign that the upside was limited at that point and needed some cooling off. Also some relative volume showing up today, which is good. Definitely some serious buying going on from the lows. Alright, so with that out of the way, we'll go to the option chain here. So let's say you were long the 225 calls, or sorry, along the 215 calls. You wanted to roll to the 225 calls. So I guess I'll start from the beginning. Let's say initially when you got in at the 215 calls, obviously they were cheaper than they are now. They've gone up a lot in value since then. And let's say the delta at the time was 0.6, which is usually around the delta I like to get. Well, now the delta is just about 0.7. The calls have gained a lot of value. And at this point, you're still bullish on Apple. You still want to let it run, but you also want to take some profit off the table, take some capital out of the trade. A decent way to do that is called a vertical roll. Now there's different types of rolls. There's a vertical roll where you're simply just changing the strike price and maintaining the expiration date. There's a horizontal roll where you're only changing the expiration date but maintaining the same strike price. And then there's a diagonal roll where you change the strike price and the expiration date. In this case, I'll just show an example of the vertical roll. Okay. So yeah, we want to roll the 215s up to let's say the 225s. Because that's roughly around 0.6, just under 0.6, so 0.57 delta. So as you can see, the 225s are a lot less expensive than the 215s at this point. So what you would be doing is a custom order here on Thinkorswim. And okay, let's say using January as an example, January calls as an example, you would sell to close the 215s, simultaneously buy to open the 225s, likely in the same quantity, although you could certainly change that if you wanted to. and you would do that for a net price. In this particular example, a net credit, but it could certainly be a net debit depending on where you got in and all that. And then you just set a limit order between the bid and the ask, mid price order, and you put the order in, and it would do it all as one execution instead of trying to sloppily. All right, I'm gonna close my 215s, and then a few seconds or minutes later try and open my 225s. That's kind of sloppy because then the price can change either in your favor or against you depending on what happens. So that's why it's nice just to do an actual rolling order that has a net price. Anyways, and then at that point you'd be long the 225s. You'd still have almost the same upside delta, or certainly the same upside delta you started with, because obviously that delta increased as the price increased, and you'd have a lot less capital on the table. In this case, a little more than half the capital would be in play. Maybe 55% of the capital would be in play, and yet you'd still have almost the same upside exposure. So that's a decent follow-up action to take. There's certainly other things you can do, but that's one of them. I definitely like rolling when things are really flowing up nicely, and I just want to take some money off the table, but still stay in the trade. All right, hopefully that was a good update for Apple. Serial Trader signing off.